I opened last month's homeowner statement and almost dropped my coffee. Seriously, it was a 38% jump, and I hadn't filed a single claim or gotten any warnings. The shock was real, but it turns out my experience is just a drop in the bucket. Last year, extreme weather punched a staggering $105 billion hole in insurers' wallets globally, with the US taking a huge hit. Now, guess who's footing that bill? You and me. Some states are bracing for 70% spikes before the next renewal even hits. So, stick around. I'm not just going to crunch numbers. I'm giving you a real game plan before your mailbox becomes a monthly horror show. Let's get something straight. This isn't your typical inflation story. Between 2021 and 2024, homeowner premiums climbed 24% nationwide, twice the rate of inflation. But in the riskiest zip codes, we're talking about an 82% surcharge. Think about that. If your neighbor down the street is on slightly safer soil, you could be paying almost double for an identical house. Why? Because insurers are quietly redrawing risk maps every single quarter. If your county suddenly pops up on a new wildfire or storm risk list even, if the hurricane veered off course you now paying for the probability of future damage. And that probability just got a whole lot pricier. So, where is the hammer landing hardest? Florida, Louisiana, California, Texas, and Colorado consistently top the misery index. In courts at the Florida Panhandle, carriers have already non-renewed 1 in 3 policies. Replacement coverage there can cost triple what it did just 2 years ago. In California, State Farm got approval for a 17% rate hike after the devastating wildfires. And it's not just fires. Louisiana residents outside federal flood zones saw their premiums jump by 50% this past spring. Because reinsurers. The insurance for insurance companies are pulling back. If you're eyeing a house in any coastal county from Mobile Bay to Galveston, you better budget another $200 a month for insurance before you sign. There are 3 engines driving this runaway train. First, frequency. We're averaging $1 billion disaster every 2 weeks. Over the last decade, these events have cost over $1.4 trillion. Second, the cost to rebuild. Lumber is up 38% since 2020, and concrete isn't far behind. Every claim costs more to fix. Third, and most critically, reinsurance. When global carriers get hit with massive tabs, they hike rates on your local insurer. Who then passes that cost to you, with interest? Sure, the cost of this reinsurance in the US has doubled since 2018. It's a brutal equation. Now, if you rent or run a small business, don't tune out. The ripple effect is already here. Apartment insurance costs have vaulted 68% in just 3 years, while strip malls have seen a 61% jump. Those costs fold straight into your lease. So, in places like Orlando, insurance already eats up nearly 5% of property income, crowding out maintenance. One way or another, whether you own or rent, the escalating insurance bill finds its way to you. When private insurers leave, state-run fair plans are sold as a safety net. But let's be honest, they're anything but fair. In California, a fair plan can cost 2.5 times more than private coverage for less protection. It's basic fire insurance, often excluding liability, theft, or water damage unless you pay extra. Louisiana's equivalent quietly trimmed wind coverage, leaving people to self-insure against the very thing they fear most. These plans keep you legal for a mortgage, but they often fall far short of making you whole after a disaster. Okay, it sounds grim, but you're not powerless. Here's your playbook. 1. Harden your home before shopping for quotes. Impact-resistant shingles, hurricane clips, an ember-proof fence can trim 5 to 15% off your premium. 2. Raise your deductible to the maximum you can stomach. This can cut your premium by 10 to 25%. Jeds. Make sure you have that amount in an emergency fund. 3. Don't assume bundling is best. Get separate quotes for home and auto to see if a different company offers a better multi-policy discount. 4. Document everything. Photos, receipts for upgrades. This is your best friend if you ever need to file a claim. 5. Check with an independent broker every year. Prices reset, and 2 hours of comparing quotes can save you thousands. And finally, if you're relocating, run the insurance quote before you check the school district ranking. It might change the entire financial picture. So yes, your insurance bill is about to skyrocket, but you are not powerless. You can harden your home, shop strategically, and treat coverage like any competitive product. If this video spared you even one sleepless renewal night, please share it with a neighbor. Drop your biggest premium shock in the comments below. Let's commiserate and find solutions together. Hit like, subscribe. And I'll catch you in the next deep dive, because your wallet shouldn't be the only thing forecasting the weather.